Good morning, MMTs. What we have decided to do was come back over here and take a look at our platform. Now, a half delta in our platform is $75 per line on the actual Dow component. And you can see that a half delta movement is 75.24 per line. And the actual indexes on, this is how they're going to trade Monday, but we're going to examine what our platform looks like. And we're going to take a look here at where we had that top resistance within this bull rally run. This is that double bottom in ours. Here is the bull rally run. So let's go ahead and populate the diamonds in our platform, because that's all the SMF market maker index historical data with these diamonds and how these things were going to trade. We are going into a major earnings season starting Monday. We have ran the wall of worry. We had that first reversal within this bull counter trend rally right back up to the tops as they do. Here's the long short down. However, we're overbought. Bottom line is we're overbought here. This was the jobs report. It's in a bull rally. Bull rallies have to have pullbacks. Each one of these lines, as I said, are 75 points per line in the Dow on a half delta movement in our system. This is what it looks like. That's the first daily distribution bar. Now, outside of our platform, which I like because it's much clearer, plus it's got everything done for us. So what we want to do is just blow up this part of the chart. You can see this big short that we called all the way down on the Dow. Rallied on up. Look at that. 4-day rally to the top. We pull back. Then the real breakout of these double tops right here on our platform. This is where the move went down. Bam, bam, bam. But here's where that double top was taken out. There's another double top taken out right here in this rally. 1, 2, 3, 4. On the 5th day, we pull back on the jobs number. Now, we've ran too far too fast, and bull rallies need to fade back in and set themselves up. Meaning that the complacency and the fear factor are absent. There's no fear, and there is no, and everything is at a high complacency level, and there's a lot to be known about that. This is what our platform says. We finally had that pullback, and they came right in at this teeny line and came right back up. So when we were down, the swing low was 12,567 was that low. Okay. And at that point, the half bar came into play at 12,642 on the S&P. In bull rallies, what happens is that the good thing about the strength of that bull rally breakout here, when you're breaking out these tops and you come back up here, it took a jobs report. Bull rallies pull back, but they're buying that dip right there. We were down over 150 handles on Friday. They came right back in and bam, they bought exactly at that teeny line right in our platform. Everything that we have over here. Our platform does not lie. None of the movements lying here. The prices are all done before the market's going to go up. Then it's the relationship of the broader Dow 30 of the buyers and the sellers, and they're buying the dip. Now, when I show it on a standard chart, MMTs, which these are the same double tops in our platform is much better because it does all the mathematical calculations as far as the trend cycles go. And what I will say over here, that when we take a look at that short-term cycle, is it's going to take something to, we're overbought. So right here was 93% on a daily. We come down, we hit this trend line of these double tops. That's the support in the bull rally bounce. So we're at a double daily top at resistance of where the trend starts down. Our platform looks much better. It's got all the math done for us. Here is just a standard chart of what standard technical analysis is, 93.43%. We dropped down to 91. We're overbought on the Dow Jones on a daily chart. Once again, on our platform, the thing I like about it is the clarity that we have at each line is drawn for us mathematically. And there's 70, a half delta, I'm sorry, is going to be 63.33. 63.33 per line. It updated as we were doing it, and I did the diamonds, and the diamonds changed the calculations to 63 per line. Dip buying, What we're going to be watching during the earnings season is going to be very volatile. We're going to see how much of a bull retracement we get, the consolidation at higher levels. It's going to take some great earnings to break these tops over here. So here is the Dow top reversal that we called on our stock market funding site, and we went down for a lot of weeks. But look at the shorter time, look at the amount of days down. You rallied up, bam. Now, when you get bull rallies, you like the bull rally up, pull back a couple of days, set up, and then take another run for another highs. That's a healthy bull rally market. Parabolically straight up going into earnings season means that a lot of the good things that were going to happen next week in some of the Dow 30 and the earnings have already been priced to perfection in the individual Dow 30 stocks, and this is part of those Dow 30 stocks that took the Dow Jones up to its all-time highs. Once again, the public indicator is public analysis. We're overbought. We are overbought going into earnings. Buy the rumor, sell into the news. Dow Jones daily chart.